Good morning, everybody, and welcome to this edition of the Australian Market Preview for Tuesday, 15 December. My name is Carl Capelingua. I'm the market analyst over here at ThinkMarkets, and it is a pleasure to be with you as we kick off another trading day. We are staring down potentially a small loss at the open, but hopefully, much like yesterday, we'll eke out a reasonable gain by the close. We'll talk about that and much more after we talk about ThinkMarkets Difference. We give you $8 flat rate trades, your own holder identification number, unlimited phone support, and of course, no hidden subscription or platform fees. 4 fantastic reasons why you should choose us for your next ASX share trade. And here are 10 more. If you're looking to switch your broker by 31st December, come over to us and get your first 10 trades for free. Okay, the agenda for this morning is to check out what's going on around the world. We'll have a look at some charts, bring it close to home, see what's going on with our local companies. And we won't look at macroeconomic data because there wasn't any major data yesterday or overnight, but we will have a look at the calendar for the week ahead. Okay, having a look at the performance of the ASX yesterday, not a bad session overall. We started lower but managed to close up 0.27% by the end, led by the financial sector, discretionary sector, and of course the tech sector. NASDAQ outperforming a little in the US, I think helping there, but also Afterpay doing quite well, and that's one of the key stocks within that index. Staples did pretty well, utilities got a gain, but the rest not so good. Gold, healthcare, materials stocks and energy stocks pulling back. Not huge losses there, but I think if you're in the gold sector at the moment, you're getting a bit worn out by the ebb and flow is generally moving in the wrong direction for you, unfortunately. Healthcare's suffering on the back of that strong Aussie dollar, which undermines their earnings, much of those earnings in US dollars. When you think about the likes of CSL, Cochlear, ResMed, Sonic Healthcare, Ramsay, they've all got big US dollar exposures. Having a look at Asia, up on the Nikkei in Japan, up on the Shanghai Composite in China, but down a touch on the Hang Seng. We have a 0.6% decline in the Dow Jones Industrial Average, on the benchmark S&P 500 market 0.4%, but the NASDAQ continuing its outperformance, up 0.5%, I should say, and that should help our tech sector again. And I think the broader market as well. Volatility, unfortunately, creeping higher. In the UK, we're down 0.2%, but reasonable gains in Europe. Having a look at the base metals, this will might provide a little bit of softness for the materials sector. We've seen some pullbacks there in copper, 1.3% on the London Metals Exchange, nearly 2% in New York. Zinc down 1%, lead down 2.5%. Nickel, though, that's one bright spot, getting away with a 1.3% gain. And we'd see gold and silver continuing, as I said, that ebb and flow in the wrong direction if you're a gold bug or a silver bug, that is. Energy, a little bit mixed there. A small gain for West Texas, but Brent down, natural gas popping a little bit. The Australian dollar pretty flat as the US dollar index backed off a little on strength in the pound and the euro, and bond yields continuing to creep down. In terms of the charts, we did make a new trough on the S&P 500 at 36.33. Unfortunately, we a little bit of a shooting star sort of pattern there. It fired up on the open and then flamed out and closed on the lows. And that is a concerning bar for me. It's just one bar out of many. Of course, the short-term trend remains higher. The long-term trend remains higher. We're still in the higher peaks and troughs phase, so they're all good things. But I am concerned about the supply that last candle denotes. So, getting a little bit more cautious on the S&P 500, but it's only a little bit of short-term caution amidst the backdrop of, what is still a very, very strong uptrend. The NASDAQ, that's really is that little shooting star doji there, isn't it? So we open up and we actually gapped up. So, at least on the open, there's a lot of positivity, a lot of demand clearly in the system. It doesn't get very far. Why doesn't it get very far? Well, because there's supply meeting that demand, and then that supply overwhelms the demand and pushes it down by the close. The demand really wasn't that crash hot when you think about it. Certainly not what the open indicated. So there was no follow through, and the supply clearly is still lurking. So I'm not happy about that candle. I like the couple of candles before it. They're quite positive, but yeah, a little bit concerned. So we'll just keep an eye on that situation. Another down night tonight would confirm a lower peak, and lower peaks aren't always great things in terms of price action. But hey, short-term trend, as we can see there from the the green zone, the shorter term moving averages, and then the darker green zone, still fantastic. So we'll give it the benefit of the doubt at least for another session. Having a look at the Aussie market, it wasn't a great shape to the trading session overnight. This is how our S&P ASX 200 SPY futures reacted to the US trading. And here we're looking for the general shape of the chart to give us an indication of what might happen today. And it wasn't fantastic. So, it's almost top left, bottom right. And then we want to see, well, where do we close in relation to the high and the low? And we're closing far closer to the low than the high. So I did mention at the start, we'd like to see a repeat of yesterday where we opened low and closed high. They're always good, but this isn't suggesting that that's going to happen today. We did make a new trough there at 66.32, and it's a higher trough than the 65.11. So we're continuing our high peaks and troughs. But I do note that 67.46 peak is so close to that 67.14 peak. Whereas, if you look at the distance between the 67.14 peak and the 64.71 peak, so we're talking about the relative distance between these two compared to these two, we are losing some of that upside momentum. Now, I've been reluctant to draw on the chart up to this point simply because PowerPoint at the moment is quite temperamental, but it seems to be working for me today. So seeing that trend ease off a little bit, the momentum decrease. Not surprising given how well that trend has performed, or how well the market has performed to create that trend. Once again, you have to give it the benefit of the doubt when we have a very clear short-term uptrend that should support prices in this zone. And, we may see something like this before we go higher. And I do think we will go higher as we do have this long-term uptrend as well. Maybe we just need to catch our breath a little. What does it mean for you and your positions? Well, you might find we have a little bit of short-term volatility here, and it might test your patience somewhat, and it might test some of the profits that you have in your positions. So again, we'll have to go back to an individual chart basis and decide whether we buy, sell, or hold. But that's what we have the Think Technical update for. So keep an eye on that in the market news section of the website. Okay, looking at the dividends today, nothing today, but we've got a few coming up tomorrow and through the week. I'll let you press pause because there's quite a few. We're going to the second page now, and you can see if your stock is on there. Having a look at broker moves from the last 24 hours, we've got Jefferies increasing their price target on Ampol from 33.50 to 36, so a nice bump up there. But they've downgraded Altium from buy to a hold, but they did raise the price target slightly from 38.84 to 39.80. Value Engine downgraded ANZ's rating from hold to sell. JP Morgan raises BHP's price target in Great British Pounds. Forget the dollar sign there, as it suggests here, Great British Pounds on the London Stock Exchange, they retained their overweight rating. So we're just really looking for the percentage change and then relating that back to whether there's confidence in the stock or not. And Citigroup raises Iluka's price target from 620 to 660. Goldman Sachs retains a neutral rating on Rio Tinto and their 98.10 price target. As I said earlier in the presentation, there weren't any major economic data releases from the last 24 hours, but looking to today, we will get the RBA policy meeting minutes from their December meeting earlier in the month. It was a bit of a benign meeting. Nothing of particular note happened there. The market wasn't expecting anything after November's big move, so I don't think we're going to get any surprises in that one. Having a look ahead for the rest of the world, China, some big data coming out today, and I'll update you on how they went tomorrow. And then this evening, we'll have the Empire State Manufacturing Index, import prices, capacity utilization, industrial production, and TIC. I don't even know what that one stands for, to be honest. Long-term purchases, the ones I do look at, industrial production, I like to look at that one. And yes, I do follow those Chinese ones. Okay, catch all the replays and the other market news items that we put out. I mentioned Think Technical in the market news section of the website. You can follow me or the Think Market handle there on Twitter if you like. We do have one update left for the year in terms of video webinars, and that is the weekly Think Tank, where you can join in, participate, ask questions at the end if you like, and then we'll suspend over the break and pick up with our Think Learning series early in the new year 2021. The disclaimer before I leave you says that everything we've discussed today is general advice. Don't forget we are a regulated Australian broker, and we do have some products that could see you lose more than your deposit. So make sure you read this disclaimer carefully. If you have any questions, certainly give us a call or consult the website for further details. It has been a pleasure being with you this morning. All the best for your trading. Until we catch up again, bye-bye for now.